Good morning to everyone tuning in live here at Now Bam on YouTube. Let me know in the comments where you are tuning in live from. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. And on today's Hot Sheet, I will cover new inflation data, a downshift in housing starts after an increase in new home sales in December, and the 5 metros where rents have dropped the most. Today is Friday, January 27th, 2023, and the Hot Sheet starts now. Closing out the third full week of the Hot Sheet. It's live every single Monday through Friday. The markets are open at 9:30 a.m. Eastern, and we have really enjoyed doing this show up to this point. It's an enormous lift, and the best way to support it is drop us a thumbs up right now and share this video with one person who wants to know more about what's going on in housing with a 24-hour look back each and every single day. We've got good news to start the day. Key inflation measure eased in December. Consumer spending fell 0.2%. This was just released this morning. We talked about the GDP going up 2.9% on yesterday's Hot Sheet. You can go back and listen to that or watch it in the live YouTube tab. U.S. households cut spending in December, adding to signs of an economic slowdown. Okay, so I said we've got good news that inflation is dropping. Yes, this does mean an economic slowdown. That's what the Fed is going after. We want to get inflation down. So obviously, it's almost like an oxymoron. Economic slowdown, it's good news. It's good news because of where we need to get inflation to. The December spending, income, and inflation figures offer a picture of the closing month of 2022 as the holiday season wrapped up and included spending on travel, medical care, and other services. A separate report released Thursday showed, obviously we talked about this yesterday, the U.S. economy did grow 2.9%. The Fed is not going to love that number, right? That 2.9%, it beat expectations. We talked about that yesterday. It was supposed to grow at 2.8%. They want it to go under expectations, but some of these numbers today might help when the Fed makes their decisions next week. CNBC tells us that consumers spent less in December, even as inflation measure considered by the key Federal Reserve showed the pace of price increases easing. Okay, so prices were coming down a little bit in December, which could spur more spending, right, in different times, but consumers spent less. Okay, so prices were coming down and they were spending less. Two pretty good variables for the Fed to consider as they meet next week. This is according to the Consumer Department and this report that just came out at 8:30 this morning. Personal consumption expenditures, including food and energy, increased 4.4% from a year ago, down from the 4.7% reading in November and in line with Dow Jones estimate. This was the slowest annual rate of increase since October 2021. On a monthly basis, so-called core PCE increased 0.3%, also meeting estimates. Okay, so nothing crazy here with this consumer spending. Pretty much, we're still inching towards lower inflation, right? It's going to be very telling next week on Tuesday and Wednesday, the 31st and February 1st, when the Federal Reserve has their meeting. And they're going to decide, are we just going to increase this federal interest rate 0.25 basis points? Or we're going to go up to, 0.5 basis points? Some people would love to see them pause. I don't believe they'll do that. I think they're going to go with the 0.25. That seems to be, if you're betting in Vegas, that seems to be the odds-on favorite. We shall see. Some of this news today should be helpful to keep them at a 0.25 increase and meet the expectations, meet the consensus of where the Fed's going to go with the federal interest rate. It means what they're doing is working. It means the end is nearer than further away from this whole inflation and, economic catastrophe conversation that's happening. I'm still a big believer in, we've been preparing for it all of 2022. We're preparing for it now that we're going to have a much softer landing than some may think. Wells Fargo just reported that construction appears to set to downshift. Okay. They are saying that housing starts are down and are going to be down this year in particular. Let's start with the housing correction, which, according to Wells Fargo, is likely to continue. Unfortunately, the residential retreat appears to be in early innings. While mortgage rates have moved slightly lower in recent months, financing costs are likely to remain elevated as long as the Fed maintains a restrictive policy stance. The steep drop-off in new home sales means builders are likely to further scale back single-family development. Our next topic might counteract what Wells Fargo is saying here. The downdraft in single-family building permits is a strong signal that builders are planning to reduce construction in the near term. A substantial drop in home builder sentiment only adds to the evidence. Obviously, we talked about this in the last couple of weeks, right? And this is why listen, the hot sheet is collecting all of this data up to the actual minute. We actually saw that, yeah, while home builder sentiment, to Wells Fargo's point, has substantially dropped, last month was the first month that it went back up. It's starting to go the other direction. Okay, so housing starts are down, yes, and we're going to get to the exact number that Wells Fargo is going to reference here. But confidence in the last 30, 45 days, while interest rates have stabilized for builders, is up. Okay, so there is some momentum going in the other direction. The National Association of Home Builders Wells Fargo Housing Market Index, HMI, has now declined in every month of 2022. I'm going to show you that chart. It's available in the daily download below. That chart doesn't look good. Falling a cumulative 53 points since December 2021. What's the total number of slowdown in housing starts? All told, we look for a total housing starts to decline 16.6% to an average pace of 1.28 million in 2023. So that'll be what they're saying there is we're going to build 1.28 million new housing starts in 2023. It's a decline of 16.6%. Single family starts likely to be the primary source of drag on overall starts. We anticipate the pace of single family starts to average 790,000 in 2023. That's a 21% annual decline when we're just looking at single families. Lower mortgage rates and improved macroeconomic backdrop will help spur a modest improvement in single family activity in 2024. So they expect it to go up as we go into next year. Multifamily construction appears to be downshifting from the lofty pace of development seen over the past several years. We talked about this on yesterday's hot sheet. There's just been, last 2 or 3 years, this like inventory dump from, commercial builders building multifamily homes. The government making that. I guess everybody just wants America to be a renter nation. And you're now seeing multifamily permits on a downward trajectory because they are in an oversupply situation. If you go on Twitter and just follow some of these multifamily investors, they're like, hey, I'm getting deal after deal after deal sent to my inbox right now from people wanting out of multifamily deals because of all of these new starts in multifamily that are going to be hitting the market in 2023. This oversupply might be creating of a bubble for the multifamily sector. Multifamily building permits have been on this downward trajectory, are now at 9.2% below their level 1 year ago. So I think some of these smart developers are starting to really slow up on multifamily development. And we've got a whole bunch of charts here today in the daily download. So make sure you go check those out if you want those. Annual housing starts in the millions. Single family 2021, came in at 1.13 million. Total starts in 2021 was 1.6 million. Multifamily, and these are in the link of the Wells Fargo. There's a whole bunch of data in there. Multifamily was 0.5, basically 0.5 million, 0.47 million. Okay, so here we are. This is 2024. So we're expected to go up a little bit in 2024. I don't know why I get on this eraser here. There we go. There's 2024. Expected to go up a little bit in comparison to this year. This year, obviously, way down from 2021, 2022. There are reports from NAR that say we are 7 million homes short to meet long-term and short-term demand in this country. And we can get into what price points, right, that demand is speaking to. It's certainly not speaking to the $3 million homes or the $800,000 homes. It seems like right now in South Florida, You can't get a new construction home, single family, for less than $800,000-$900,000. That doesn't fit every single buyer window in America. Most people need an affordable starter home. We're not building much of that. There's a lot of these builders just that have to, because of zoning. Talked about that a little bit on yesterday's hot sheet. Because of how costly it is to get really good labor and materials into these homes, and the restrictions they have from counties on what they have to do, what they have to go through in order to build. The cost just keeps going up and up and up to be able to buy new homes. All right. So if we need 7 million homes, we're going to be building about 1.2 million here in the foreseeable future, this year and next year, give or take. And it's going to take us a while here to catch up. These years really significantly impacted us. I know I've seen a lot of reports from economists that say we need to be at about the 1.5 million number really to catch up, because of all of these years right in here. We're still today nowhere near that. We got back to that the last 2 years, but according to Wells Fargo, we're going to dip back below this year, and next year we won't be on trend either to where we need to be. Multifamily units under construction. This number has shot up like year over year over year since the last crash. It just has been on an upward trajectory. It's creating an oversupply right now. There's a lot of developers a lot of investors that are saying they're seeing deals in multifamily because of this increase that you're seeing on the screen in supply. Here's single and multifamily building permits overlapped onto each other. You've got in the orange, you've got multifamily permits way above single family marker, and single family and multifamily permits are both on this downward trajectory. And that's where we're going to see that 16+% drop in housing starts this year that Wells Fargo referenced in their report. Here's that NAHB Wells Fargo Housing Market Index. This line here is just dramatic. I mean, look at that straight drop down. National Association of Home Builders Housing Market Index is just not positive, and there's no sign here that it's like hit bottom or going up. There is last month overall builder confidence went up a little bit, so hopefully that'll reflect this chart whenever we see an update. And I got one more in here. It's down in the daily download. New home sales slowed for a second month. This one's interesting. Median number of months on market for newly completed homes. Okay. So this is supposed to say December. I think they had a typo right there, but we're at 2 months, median number of months on the market for newly completed homes. Okay. So we're not where we were, in the second half of last year, where you saw it under 2, which is, not incredibly normal, but surprisingly, we're well under number of months on the market from 2021 and the majority of 2022. You would actually think that number would be higher. So for the inventory that builders do have, it's not sitting around all that long. There's still demand for, new construction. Anything that's close to, a starter home price, there's going to be even more significant demand. We don't have enough of that. When I'm looking at okay, these new home starts dropping, and it's going to be consistent for this year and for next year per Wells Fargo. And if I'm advising somebody who really wants to get into, a brand new home or wants to, get everything done, I don't see the affordability on new homes really coming back. I know there's been some price reductions from developers right now to spur activity, but I think your best deal is still to find that ugly house, get it all fixed up, make it new yourself. Let me know if you agree with that in the comments in your market. If the best deal for somebody who's also being dollar sensitive is to go buy, the ugly duckling and fix it up, let me know if you agree with that. Okay, so kind of it might be confusing here when you look at this Housing Wire article. We just talked about Wells Fargo saying new starts are down. So new starts, new permits for new home construction are down over 16% expected for 2023. Housing Wire, though, just today or yesterday reports that optimism is spreading after new home sales climb in December. That's where we could see that NAHB chart start to go up if optimism continues to spread. About 644,000 new residential homes were sold in 2022, which is a decline of 16.4% from 2023. But new home sales increased in December. Okay, so this is sales, while what we were just talking about is housing starts. So this is sales of the current inventory or inventory that's being built. A sign that residential sales have continued to rebound in recent months. Last month, new home sales increased by 2.3% to a seasonally adjusted annual rate of 616,000. That 616,000 would still be less than 2022, but it wouldn't be as far as of a drop from 2021, which was the 16.4% drop. This is according to U.S. Census Bureau and Department of Housing and Urban Development. But while mortgage rates have been tumbling down and while builders have been offering incentives to buyers, it wasn't enough to prop up new residential sales across that 2022. In addition, median sales price of new houses that were sold in December dropped to $442,100. That's still above the median average, the median sales price in the U.S. Okay, so this is where we get into, with this new home construction. How do we get it closer to the median U.S. number? 440,000 is still significantly above that, right? You're not gonna find in too many communities in America. I get it. A lot of people live in fancy, and they think $440,000 right now is not a lot of money. There are a lot of communities in America where you talk to 90% of homeowners and they can't even touch that, right? So this isn't $440,000 is not affordable for a lot of people who would buy a home, but with some of the policies we talked about yesterday with on the hot sheet with the U.S. government and this, this push for multifamilies, people are just like, okay, it's cheaper for me to rent and I'm going to have to keep renting. We got to get the affordability in housing down if we want more homeowners in this country. In addition, the median sale price, 442,000 dipped to, and the average sale price dipped to 528,000. So the average is up over $500,000. In November, the median sales price for new houses was 471,000. The average price was 543. So down a little bit from November, trending in the right direction for affordability for new homes. This is what down here at the bottom here of this article I thought was interesting from Joel Kahn, Mortgage Banker Association president. The housing market is still in need of more starter and entry homes. Yes, Joel. Been saying this for a long time, 100%. About 644,000 new residential homes were sold into, we talked about that number, and declined from 16.4%, especially when current demographic trends point towards potential for more younger households to enter home ownership in the near future. New construction of these units will help these buyers entering the housing market. They'll help those buyers if they're at an affordable rate. We know how big the millennial buying demographic is right now. And we also know how hard it is for them to find a house that fits their budget, right? And so, listen, if they're waiting for some new home inventory to come out, and then on top of that be affordable, they're going to be waiting what appears to be many years, because the next 2 years don't offer that in sight. I'd be educating my millennial home buyers, if I'm advising them in any way, shape, or form, to let's go look at existing homes and figure out how we can make this new. What's your total budget? How can you get this thing done so that you can make the repairs to make it feel brand new for you? Your dollar is going to go a lot further in that scenario. Hit the thumbs up, by the way, if you agree with that. And if you don't agree, let me know in the comments. Maybe I can address a comment here at the end of the show. We talked about rent prices yesterday, and that rent is now $800 on average cheaper than buying on your monthly spend. CNBC just this morning put out some data that says rent prices have dropped the most in these 5 metros, and why it's cheaper to rent than buy in many markets. We covered that yesterday, CNBC, on the hot sheet. So make sure you're subscribed to BAM YouTube if you want this information even before CNBC starts talking about it. Despite rising U.S. rental prices, competition is easing in some markets as inventory grows. At the end of the second half of 22, median U.S. rent was $2,300, And that's nearly 6% decline compared to the close of the first half of 2022. Let's get into the 5 metros with the largest annual rent increase. Okay, so here's where they're increasing the most. Indianapolis, okay, rent increase of 30%. Charleston, South Carolina, rent increase of 25%. New Haven, Milford area of Connecticut, rent increase of just under 25%. Naples, where I'm going live from right now, rent increase of 24%. Look at that median rent at the end of 2021, 5,200 up to 6,400. This is where I talk about some of these communities where people just have no idea what, affordable housing even looks like when you're talking about a $5,200 to $6,400 median rent in Naples, Florida area. Pittsburgh, rent increase of 23%. 5 metros with the largest annual rent decrease. Okay, so here's where they're actually going the other direction. Memphis, Tennessee, one of the 5 metros with the largest annual rent decrease. Port St. Lucie, Florida, over on the east coast of Florida. Cape Coral, just to the north of that Naples market, has a 5% rent decrease. Cape Coral, one of the heaviest hit during Storm Ian. Median rent, not mental rent. Some of these rental prices are mental. Some of these rental prices rather are mental. Median rent at the end of 2021, $4,000. Median rent at the end of 22, $3,800. Cape Coral. Okay, so still cheaper than Naples there. Palm Bay, Florida. So you're seeing some Florida communities where these rent decreases are happening. Negative 4.3% rent decrease, and then Phoenix area, negative 2%. Okay, so it's a pretty dramatic shift. Housing expert says, I think some of those rent increase, the first 5 where we saw the largest rent increases, are definitely dramatic. The inventory that is coming onto the market for new multifamily starts should help continue to bring these numbers down. What is a problem going forward is if rent continues to drop and some of these single family homes do not, you'll see buyers, and we don't start seeing an increase in inventory. I'll be interested to see Monday, Tuesday next week as we talk about inventory for this week across the country, where that went. Hopefully it went up. We need inventory to go up for a healthier market. What I would worry about is these rental prices drop, if some of these buyers start quitting the market, right? And they go back to renting. This is where, your advisor really needs to have a conversation. Well, how long are you going to be in this area? Oh, it's going to be 10 years for sure. Like, it's 7 to 10 years with certainty that you're going to be in this area. Well, let's look at the data here locally and let's have a conversation about how much money you're going to spend by wasting the next 2-3 years renting, right? And I know a lot of people on TikTok and Instagram right now say, well, don't tell people they're wasting money on rent. It's a different conversation if they say, I'm going to be in this community for 18 months, for 36 months. The advice is like, hey, it's not a waste of money. You need shelter, go rent. Prices are actually coming down. You might be able to negotiate, right? That's good advice. But when you're talking about living somewhere for 10 years and there's certain needs that they have for their family and for their lifestyle, then the conversation has got to shift in a big way to home ownership. And it's not easy right now, but this is why the best professionals are going to help the most amount of people. Today at 2:00, we're going to be going deep on to how to help the most people. If you care about housing, if you care about your clients in any way, Knowledge Brokers Podcast at 2:00. Go over to @Knowledge Brokers Podcast on YouTube, subscribe, and we'll have a new episode up today at 2:00. Let's check out where the 10-year is. Okay, it was up early this morning, and it's come down about about 0.01 basis point. So not a lot, but it ticked down just a little bit from where it was this morning before that consumer report came out that we referenced here at the top of the show. It is above, the 10-year yield is above 3.536. I would expect that the mortgage interest rate, the 30-year fixed rate, goes up today based off of these numbers. It was 10-year was up more, but at least the markets responded positively to that consumer report, and they did drop back down immediately after. That was right at about 8:30 Eastern time this morning. 30-year fixed was flat the last 2 days at 6.18%, according to Mortgage News Daily. both Wednesday and Thursday, 6.18. I do expect it to be up back over 6.2 as we end the day, end the week, and go into next week. Good news on mortgage rates, of course, is that the last 2 months, they've been incredibly stable, and we're starting to feel more comfortable in the buyer community, in the lending community, in the real estate community with where interest rates are right now. Again, go over to at Knowledge Brokers Podcast for today at 2:00. Myself, Tom Toole, are going to be going in deep on a lot of the stuff that we talked about here on the hot sheet. If you're really enjoying this, please consider sharing it with one person who cares deeply about housing and how all the economics are impacting it right now. And I will see you back here next week for week 4, the true test to the hot sheet, when we're on the road doing the hot sheet. I'll see you next week, Monday, live at 9:30. Have a great weekend, folks.